Today you are going to learn the use of double entry and accounting system in part C of financial accounting syllabus. Accounting system is a system to record and maintain all the business transactions which in systematic way in complying with the procedure and any internal controls. So this accounting system must be able to ensure the resources are allocated in efficient and effective manners, and it must incorporate with policies and procedures, including necessary internal control to assist management in achieving organizational objectives. A useful accounting information is an accounting is about that financial prepared by a business must fulfill the qualitative characteristics that you have learned before to enable that user to make decision making. The qualitative characteristic that you have learned before is faithful representation, relevant, comparability, verifiability, understandability, and timeliness. So you just look at the previous lecture notes in order to understand all these qualitative characteristics. Organizational objective have two objectives. One, management must ensure as far as possible to orderly and efficient business conduct, including adherence to management policies. The assets are safeguarded, the prevention and detection of fraud and error, the accuracy and completeness of the accounting records, timely preparation of reliable financial information, and secondly, the internal control related to the accounting system are concerned with ensuring that transactions are authorized, all transactions and other events are recorded promptly at the correct amount in the appropriate account in the proper accounting period. Access to asset and record is restricted, and recorded of asset, for example, in asset register or perpetual inventory records are compared with physical asset on periodic basis. Any appropriate action is taken regarding any differences. First, we are going to discuss on source document related with the selling by seller, selling goods by seller. First, from quotation given by the seller, customer will make order by orally or by written, and then customer will place order through sales order. In this sales order document, the details should be a customer detail, product codes and quantity, and then from the sales order, seller will send the goods to the customer with a good dispatch note. This goods dispatch note is document that give detail about product quantity and delivery details. Okay, when goods have delivered to the customer, so the inventory record should be updated and decrease the bin code. After the customer receives the good, The seller will send sales invoice to say about the amount to be paid to the seller. The sale invoice will have product quantities, price, tax, and etc. When they produce the sales invoice at the same time, seller will record this transaction in sales table, which is the prime book of entry. In a book prime of entry, at the end of the month, all the amount of sale table is total up, and this amount should be transferred to or posted to the ledger, nominal ledger. Which is a nominal ledger. Whatever required nominal is a part of double entry. Okay, when transferred to the ledger, this transaction should be debited to trade receivable control account, credit sales. And at the same time, when the seller record in sales table, so the memorandum ledger should be updated also about the amount of the debt of the receivable. This memorandum ledger is not part of double entry. It is only as a reference to know about each receivable and its detail. Okay, at the end of the month, the seller will extract from receivable ledger about the debts of a receivable and produce customer statement. In this statement, it will show detail about sales involved, credit note, cash receipt, and a balance for the receivable for that month. Also, at the end of the month, the seller will look at the trade receivable account, control account, with the total of list of balances in memorandum ledger of the receivable ledger, whether this amount, both total the balance in trade receivable control account and the total in list balances is whether agree or not. If not agree, a seller will make reconciliation to this account and to this list. Now we are going to look at the source document related with the buyer. Seems quotation given by the buyer and purchase requisition was done by the buyer to request about the purchases and also the expenses to be incurred. And then they will place purchase orders to state about product cost, quantity, and other price. After that, they will go, this buyer will receive goods together with good receipt note. Same as the dispatch note, it will show about their product codes and quantities. And when this could have been received, the buyer also will update inventory record in record. This is as internal control for the inventory. And then after that, the buyer receive purchase invoice. Purchase invoice. This was given by the seller. It will give about the product quantity, price, tax, and etc. Okay, upon receipt of purchase invoice, the purchase book should be updated by record date of this transaction, which is the purchase book is the prime book of entry. At the end of the month, the total of the purchase of the book will be posted to the nominal ledger by debiting purchases and other expenses and credit trade payable control account. So this is a nominal ledger which is part of double entry. And then at the same time, when this buyer updated purchase daybook, he also need to update also the memorandum ledger related to purchase ledger. As I mentioned before, this is not part of a double entry. This is only reference about all the payables. So at the end of the month, the buyer will receive a supplier statement from the seller, and this statement will be checked with the payable ledger to the payable that send the seller that send the supplier statement, and the balance of supplier statement with the payable ledger related to this payable should be agreed. If not, they need to do reconciliation. This buyer need to do reconciliation. Also, for the trade payable control account, for nominal ledger should be checked with the total list of this payable ledger, total list. And if the amount is not agreed, again, buyer also need to do reconciliation. Okay, this is a procedure for cash transaction related with receipt. Okay, the buyer will receive a payment by the customer together with remittance advice to state about the payment about, and then this remittance advice will send together with a check, and also payment also receipt also can be done through credit transfer through bank. And then if these have been received by the seller, this check or amount that been transferred to the seller account should be recorded in cash book at receipt part, which is this cash book is prime book of entry. And at the end of the month, total of the cash book and receipt part should be posted to nominal ledger. For each amount that have been paid by the trade receivable should be credited to trade receivable control account and debit cash in nominal ledger. Same things when this cash book is being updated, so the memorandum ledger to receivable ledger should be updated also. So this amount, this receipt will decrease the amount that of the receivable. For cash transaction related with payment from the invoice that received from the supplier, the buyer will request for the request for the payment to be paid from check requisition or payment requisition. After approve the request, so the check being prepared or the amount can be transferred to direct debit of the bank account. So if there is amount of the debt have been received through check or direct debit, so the buyer should update the cash book and part of payment which is this is a prime book of entry also. At the end of the month, each total of the payment should be transferred, posted to the nominal ledger, and also the amount that been paid to the seller should be posted also to nominal ledger by debited trade payable control account and credit cash. This is a part of double entry. Same thing to memorandum ledger. When the buyer update the cash book, they also need to update for the memorandum payable ledger, update the payment, so the debt will be decreased. Now let's go to procedure on recording goods received. Upon receive delivery note with the goods, and the buyer will receive good receipt note or will produce a good receipt note stated about the goods that been transferred, the quantity, and about specification of the goods. From that, the buyer will update inventory records. This is internal control for the inventory. As for good dispatch documentation, this is at the seller part. When the goods been transferred to the buyer, they will also send the dispatch good with the goods that said about the same thing with the good receipt note, stated about the same thing of the goods receipt note. And then the seller also will update the inventory record to show the decreased amount of the inventory. Lastly, the transaction of tangible non-current asset relates additions and disposal. In order to purchase assets, a business needs to prepare the document of capital expenditure requisition to state about the purchasing of non-current asset, and then the purchases was done by placing order. The procedure is same as what we have discussed before related of purchasing of goods and services. This is purchase invoice related with the non-current asset. From the invoice, the business will update the assets register, state about the non-current asset, detail about the non-current asset, location, serial number, and so on. And then, if the company want to dispose the non-current asset, so after disposal, if there is any proceed, they will receive check or any method of payment. When you receive check, this amount of the check should be updated in the cash book at receipt part. At the end of the month, it should be posted to the nominal ledger by debited bank or cash account and credit disposal account upon receiving proceed from disposal of non-current asset. Okay, at the end of the month, so the financial department will receive notification of the disposal of non-current asset, and they will do adjustment through the journal by debited disposal account and debited accumulated depreciation account and credit asset, and this one task posted to nominal ledger. And from this, then recording, they will know either the company will will gain profit on disposal or loss in disposal. This one you will learn later. All procedure related the previous transaction can be summarized in this table related with the document and purpose. So the first one is quotation. The purpose for quotation is to establish price from various suppliers and clause refer to purchase. This quotation is to state about the price of the goods that have been purchased by the supplier. So the content is quantity, description, details, and goods required. And then a purchase order and sale order. This is related this document, which is the original part is the sale order that sent by the seller to the customer, and the duplicate copy, the duplicate document will be kept by the seller. This one we say that purchase order. So this one detail will have the seller name and the buyer name and all the detail about the goods or services that been delivered, the price, the term and condition, and etc. And then good dispatch note and good receipt note. This is related also. Dispatch note. This is goods that been produced by the supplier, and also goods received note. This is at the buyer side. This is as cross-check for the goods being delivered, about the quantity, about the detail, about the good description, and others. And for the goods receipt note, this is as proof of receipt of the goods. And this one must be matched with the delivery note and purchase order, whether the goods being transferred is the same amount that being ordered by the company. And then invoice. For the invoice also we have two. One is purchase invoice and sales invoice. But the business that produce invoice is the seller. The original part should go to the buyer, which we call the purchase invoice, and whatever copy left to the seller is the sales invoice. So this is invoice. Purpose is to request payment from the customer. So the content is name, address of supplier, also for the customer, detail of the goods, quantity, price, value, sales, tax, terms of credit, etc. And then credit note. Credit note is issued by supplier to state that the debt of the trade receiver have been reduced due to returning of the goods. So the content is about the goods being returned, quantity, so the name and address of the buyer, also the detail about the supplier. So the debit note is related also with the credit note. This is debit note issued by the buyer upon returning the goods to the buyer, asking the buyer to reduce the debts of the customer. Same details, contents of the debit note is the same as the credit note. So for the statement of the customer, it is issued by the supplier to say about the balance of the customer to the buyer. This statement has cross-checked about the amount owing by the customer. So detail also about the name, address, invoice date, credit note, payment made, refunds, and amount balance of the debt. And remittance advice is sent to supplier with the check to state what is the payment being made, the total amount. So in this remittance advice, the method of payment, invoice number, account number, and date, etc., and the total amount that been paid. And lastly, when a seller receive the check, they will produce receipt to the buyer to say that the amount have been received. So detail is the amount that been received. So it is all about the accounting, double entry and accounting system that you need to learn. So the detail about the business transaction really that I have told you. This one you will go discuss more in next chapter. Thank you.